let's get to it. Today is Friday, and what our Fridays transpiring? Patience, a whole lot of waiting, not eager or tempted to jump in anything. So I'm coming into the market with that mindset. Let's see what we got for today. So you see we had that crazy push down last night. I was teaching last night, and during our class we seen this whole drop. Seen that drop, and then we seen it come right to this consolidation here, and then bounce right off of it. And it's playing off of that same consolidation. So that's what I'm looking at this morning. Just trying to see how it's going to handle agent range low. If it does, is it going to go sweep this low, kind of wake up into it, and then continue to the downside, or it's going to bounce off this consolidation and continue back up to the upside? But taking it slow, not jump to a conclusion real fast. Let the market open, see how it reacts to that drop last night, if we have any reaction, and then from there, go accordingly. So that 4-hour imbalance is broken, so I'm not going to use that one. Let me check it. Let me see. First, let me get everything off my chart, because now we're at the end of the week. So you want to see how the market is going to play out finishing off the week. Let me 1 second. Open up this chat. I had to pull up the chat. Now I can see it. So look at that 4-hour. So we had that imbalance here that we had marked up, which I took off, which was here. And we went and we broke that. Okay, cool. So now that we broke that, just seeing in this general area what can possibly happen. That's what you want to pinpoint. When you're looking at the market, all you want to do is find out where things can likely happen. And if something happens there, then you're able to capitalize off of it. So we know that we have that 1-hour consolidation, but just looking and seeing where this body stopped at, this candle right here, is there any correlation to why these stopped there? So what I see, just looking at that, and your eyes should go straight to it, is this consolidation right here. So drag that over and then boom. So now, if we look at our 1-hour consolidation, and then our 4-hour, they're overlapping each other. So that's a good area to be in, because as you see, all this price action happening inside of this area. So let's go ahead and label that. Okay, so we got that 4-hour right. Another thing I want to look at is this wick that came into this 4-hour imbalance. Let's look at the midpoint of that. That level was 22,879.50. So basically the high of the consolidation. So I can know that we're sitting at the high of this consolidation, and we're sitting at the midpoint of that wick. So that should be like a good confluence. So let's just label that, because you're just getting the preparation for the market open. So 4-hour. Now, are we going to use any of these things when it starts playing out? We don't know. 4-hour wick. So lock that, and then we see that price has already went to this imbalance here. So we had this big old imbalance here. Make sure you label it. Very, very important. Okay, cool. So right now we're just getting set up. No need to focus on what you're trying to see, what should happen right away, because you don't want to entice yourself to take something early. Now, if you see something, that's you. But for me, when it comes to market open, I want that storm to pass, no matter if it's a storm or not. So I'll just wait patiently. Okay, and remember that we have this high here that swept all of that. So that all of this was a break in the sweep. So looking at it from a dealing range perspective, you have basically that to that. You can even say this low, because, and the reason why you can say this low is because this low initially came down and this one just wicked into it and then it pushed up. So if you look at it from a range perspective, it'll just be this. And you can look and see where we at in the range, just to have an idea. Oh, and look what you have here. Look at where the consolidation is. So now this will be a 4-hour dealing range. And I'm using higher time frame because I don't want to entice myself on a lower time frame yet. I'd rather just let it pass. Okay, so you got that. That's a little bigger. I don't like that line though. So like stuff like this, like little lines like this, and I see price come back to it and tap it. Your mind's like, that's a key level. It is, but it's not one that you're trying to use right now. So I'll keep it over here. I just dragged it over to identify that all of this was a sweep. So drag it back here. Boom. Now we see that we're sitting still inside of a premium. We came into a discount here, went took out the high here with that sweep there, and now we're just pushing to the downside. We went to a discount here, and then price pulled back up, and then we're just slowly pushing down in this wick. So looking at right now, just based off the 4-hour, and we just rebalance this imbalance right here, that possible imbalance. So we don't have nothing stopping us going to the upside off of this here. This move may already be inside of a continuation because of this wick going into a discount, but we'll see how price opens up. This is our 4-hour markup. Let's look at the 1 hour from that perspective. So same exact theory, price bouncing off of this imbalance here with consolidation here, and then you have the midpoint of this wick. Now look at that, 22,857. Look at that, 22,857 bounce right off of it, and this will be 1 hour. See how we play out these levels. Okay, so now we have 1 hour 15. Glance at our hour real fast. Yeah. Alright, so get that there. 15-minute there. And I'll 5 here. And watch the market open. See that model right there? Inversion, confirmation, price went down, hit the initial stop loss. We hit it a couple of times and then pushed up. Now remember, the market is opening based off of that drop we just had. So we want to see a lot of volume initially in the market because of what it did last night. Let's see if that volume carries over. There's that push up. Don't let the 5-minute entice you to do nothing. Sit back, relax, and you wait and see what's trying to transpire. Because right now we see that price is going into this 1 hour CIVI or ceiling, and we have the same one right here. So see how price reacts to that, and then we have this consolidation on the hour there. For the opening, that's expected a bigger opening than that. Let that kind of dance around. And then too, with Fridays, you definitely want to have the mindset of like having that circuit breaker for yourself. If you don't feel like in sync and it's like within an hour or 30 minutes, like right now, I'm trying to see if I'm going to get in sync or not with the market. If I feel like this is going to be a good market to trade. If it's not, I have to make a decision that, okay, today's a wash because it's Friday and I don't want to get caught up and trying to do a price action on a Friday and then taking that same mindset into the weekend, because Fridays is just one of those days. It really is. It can be demoralizing sometimes because you had a good week and then Friday just go on tilt, or you're not in the right mindset. Your mind thinking it's the end of the week, so there's no more trades for the weekend, but it's really just closed for one day. Technically 2 days for you guys, or for me, like I don't trade Sunday, so technically it's closed for 2 days. But well, not technically, but it's closed for 2 days, but technically it's open Sunday, so it's only closed for 1 day. But me, try best I can stay away from Sunday. Do I look at it? Yeah, but when I trade it, no, I haven't did it in a long time. But when it comes to Fridays and Wednesdays, Mondays are cool because if you go into Monday with the mindset that you're looking, yeah, it is a gross morning so far. If you go into Monday looking for just the beginning of the week, and you have that mindset of looking at it as the beginning of the week, you're looking at the day. You're not looking at what happened previous. You can, but I'm more focused or in tune on what's happening today, because I know today that it's setting up for the rest of the week. Wednesday to me sometimes can feel like a Friday, just depending on the price action. But Wednesday could be either or. Fridays, I just have more bad Fridays than not. So Fridays I'll be a lot more cautious. But that's me. Somebody else can be the good on Fridays. So I would always tell you to focus on your game plan, but you only can focus on that by coming to the market, showing up, and getting those reps in and see what you good at, what you need to work on, what you need help with, all those things. That all plays a part. So right now, you see we have this expansion up, right? Let's just focus on the 5 minute right now with price action. So we don't want to take anything or anything to be too enticing unless the 15 minute was giving us clear direction of where it wanted to go, and the hour was kind of showing that. Right now, I'm not focused on anything. I'm honestly gonna wait 15 minutes. So 10 more minutes from now, just let price action kind of fade out, because I was expecting a lot bigger move because of that 200 point drop this morning or last night. So the fact that we didn't get anything this morning is kind of like, what is the market trying to do? It's probably gearing up for a move later on. So that means you'll probably have to sit around and wait for it, maybe. But let me keep everything off of the 5 minute right now. So this folder, settings, visibility. Just for right now. I want to look at the 5 minute as a clear chart. Or like its own chart. So make sure we keep an eye on the 1 hour. There. And 15 minute. There. Scoot this over a little bit. Okay, cool. All right. So looking at the 5 minute now, what am I seeing? Well, first of all, I'm seeing this consolidation here. Pretty much there. That's what I'm seeing. So we're going to go ahead and follow this. So below. Label this. Just showing you how to get in sync with it. So we took out this high here, right? And now price is pushing to the downside, but we have this floor right here. We also have price coming off of this high. And then this low. So yeah, this low taken out. This right here would have been your inversion, and this would have been confirmation. And see how this is the initial stop loss that was taken out, and then price pushes to the upside. So it's based on what you're trying to target. So you got smaller ranges that you have, but it's just like, are those ranges good for you to capitalize in? Probably not. So in that case, it's kind of like you got to stay in your hands. Now, if we had this high taken out now, and then now price is going for this low. Well, look, high, low, high, lower low, high, lower low. That's simple price action. But look how I'm not looking at none of this. I'm only focused on what's happening right now, because I'm trying to get in sync with current price action. Now you can go over here to get in sync and look at the bigger price action. Like you got this low here taking out, boom. That low came from this high, and then this high will be here. So you can go from here to here. I want to focus on the smaller range, which will be this, which will be current. because me looking at it from here to here, I already see that I'm in a discount just from this perspective here. There at first. You see how price went into a discount, back into a premium, took out the high, and then now we're going back into a discount off of this high here. So I already see that. So I want to focus on the smaller range to get in sync with what's going on, because I want to know what imbalances are in play and which are not. So this is what I was talking about earlier. You had this here. And then you had this. Then you had that. So at this moment in time when this is made, the only thing you would have had to target would either been this high or this high. So off of that high was 34 points. And you had to risk at least 12. So a 1 to 2 would have still been here, and you still would have got stopped out. And a 1 to 3 you couldn't even do. So now let's see if we aim for this high. It's 59 points. So 1 and 3 will be there. So you would have got stopped out by literally 1 tick, which is crazy. And then 1 and 2 would have been here. You wouldn't have got stopped out. Would have hit take profit. But see how I'm adjusting my risk based on where I'm aiming for, where I'm seeing price can potentially go to. That's how you want to anticipate your trades, your trade ideas. Once you have the model, is where is the market trying to go, but based off of what it's telling you. So sometimes I'll say, oh, it's going for this high, and then I can see it going for this high, but I'm like, I'm not too sure. Then you gotta wait. You gotta be patient. But remember, this initial stop loss was already hit. So this will just show me right here that price has a willingness to want to go to the downside potentially. That's what a break. That's what a break of the candle and on the initial stop loss. That's what that shows me. It's a possibility. Now price can break that and go the other way. That's why you want to have a nice area to target, and then from there that'll be your take profit, and then that'll give you you already have your initial risk with the confirmation high to the initial stop loss. But you want to see what you're able to risk based on your take profit as well, so you can add cushion to that. And you see, we aim for the second one. We had that cushion. So now we're just waiting to see how price is going to settle out. So you see how we bounced off of that confirmation here. And now price is pushing to the upside. We're still using the same imbalance or same model. But the fact that we have this, I'm not too confident in it. Now, could it play out? Yeah, it can bounce off of this and continue going up. But whenever I see something like this, and it's Friday, that's just me though. I'm seeing it for so much. Somebody may see this and like that, because you can still look at this, and as price is coming down, you can look at the midpoint. Because let's say you had this right, and you were just confident in the trade going back up, then your stop loss can be below this low right here. But since we had this, I'm not looking at this as like, oh, okay, this could still play out. In my head, it already failed because it broke the initial stop loss. That's why yesterday when we had it, that wick that went down there and then it pulled up real hard and it didn't go close below it, that's what I like. But when it's close below it, it's like if I was already 50-50 on it, it's definitely like 20-80 from a mental standpoint. fellas. Got a new student start Monday. Okay. Yes. When it's like this, I'm like, And then look at the 5 minute, but also look at the 1 hour. Look how the 1 hour candle looks, and then look at the 15 minute. 15 minutes punching out a consolidation. See that consolidation right here? See that? Right there. Right there. And that's where you get frustrated at. It's like I'm supposed to play it out. Not really. And it can very much hit there and then continue going up, but not for me. And it does this, and it pulls on your heartstrings. It's just like, man, what if it does play out? Now imagine you're somebody that was like, I'm gonna just get in every time it does it. You got in here, stopped out. You got in here, stopped out. Then you get in here and you get stopped out again. Now you're like, man, it don't work. It don't this, it don't that. No. What was the conditions of it? Why did you take it? What did you see? What did you see could go wrong? And why did you see it like that? I look at both perspectives and I weigh out which one has more credit than the other one. For me, the likelihood of this not working out was more of a likelihood for me based on just the situation or criteria. And you can't look at this take off and then be okay with like, okay, this is a trade I wanted to take the whole time, and then it finally took off and it's like, okay, boom, it was a good trade. You got smoked doing all this, but then it finally took off, and then you say it's a good trade. Like, no, it's not. It wasn't a good trade because of how it played out here. This is like, if I had to pick a grade for it, this trade in general, like the way it did that, that's like a C to me almost. Because when I'm looking at the model, I'm judging it on how it touches the confirmation. I'm judging it on how the body's closed above or inside of the confirmation. And I'm definitely judging on how it acts at the initial stop loss. That plays a big part on everything. That's why I like market execution. I like to see what the market is doing once it gets down there. Not every time am I getting in right when it touches it. Now that's the rule. Majority of the time I am doing that. But there are times where I see the market punch down real hard. I'm like, I don't like that. Because remember too, price went down to take out this low here. So if it took out this low, it can very much go up and take out this high from here. And also, I don't want you to feel like I'm telling you never take it like this either. There are situations where, let's say you waited, like how we just did. We didn't take nothing here. Price pushed up. We didn't take nothing here. Price pushed up again. We seen this market price action. And then it came down. We seen this low here. And then it never touched the confirmation, so we didn't get in. And then price pushes up and takes out the high. Takes out the high and then immediately goes for the low. Well, if it goes for the low and takes out that low and it falls inside of that same range, then you can see this happening. But you have to look at this and look at the risk associated with that. So if you were aiming for this high here, you have to be like this. So remember your risk. So this will have to go here. That's 78 points. So 1 and 3 will be there. 26 points. And then now you have another one happening right here. But since this was happening, you got this huge gap here. That means that that confirmation is gonna be huge. Unless it just pulls back super hard. But still, this wick right here, this wick from this to lowest wick to the high this candle is 36 points. Not to mention where the next candle closes at. So in that case, sitting on your hands. But this is just all navigation. Pushing up. $15-minute. Have a tiny one. Let's see. Looking at this imbalance here, see if it's Yep. So see how price treats this imbalance right here. Let me show you. This is a 15-minute. It's already inverted. This 15-minute will happen here. And look, I didn't even look at the 15-minute. There. You got confirmation here and there. You had one here. That was the first one. Keep this on the 15. It's just stop loss. Broke that. And this one played out here. At the initial stop loss. The second one here. So the body's broke, but the initial stop loss still there. And then we get 26 points. Cool. Let's keep that on there. Take these off. It's 5 minutes. See that big old confirmation? Thank you. 65 points. Jesus Christ. And you see how that 1 hour candle looked in comparison to now. It's like you want to look at the flow of the candle, what the candle's trying to tell you. Like I said, with this trade here, you have this, and this could have very much went down. So based on the risk and what you're seeing, everything is subjective. Like A plus setups, B plus setups, C plus setups. It's all based on your criteria of your trade or your qualifications of a good trade. Mine is not this. Even though if it could take off for 2,000 points, who cares? Because you can't hang your hat on one single trade. Like, oh, look, that trade played out, so it should do it next time. And then next time happens, and you get stopped out, and then stopped out again, because you thought that one time is every time. No. Okay, so that one. Let's see how this 15-minute ends. It's 1 hour in. 1 hour kind of closes. The price can very much pull back and close this imbalance. And this price, this high is 22,920. So 22,920. So that's coming back to this consolidation. Yeah, too. When you see trades like this, do I hate that this happened? Yes. 100%. Because if this wasn't there, this would have been my trade. But since this happened, And you gotta have those rules set. I break my rule once, I'm gonna keep breaking it. Okay, new hour. See how this hour plays out. Get that 15 minutes. And if, let's say you were managing this, you have this very next candle, then what am I looking at? The midpoint this week right here. So that'd be 22, let's see, 22,936.75. There. So the price tapped it twice, broke above it. Now creating an imbalance here, possibly. If you're looking at it from a 15-minute perspective, if that candle draws down into it. What's this? Need that, I'm not sure. So this is when you want to start taking stuff off your chart that you're not using. Not using the midpoint yet. No. This low. No, that low. Says a. And you got this imbalance right here. So let's mark that up. This is what to come into play real soon. Don't need that right now. Let's see. Still need that. Still need that. Okay, and then this went up and took out that high. So let's look and see how it plays off that 1 hour imbalance. Because remember, on that daily range we have marked up, we're still in the premium. So once it gets up there, I'll hide this and then focus on price action once it gets up to here. Because now we're in expansion. What are you looking for right now? You're looking for a new consolidation. Once it start consolidating, you got a new playing field every single time. C2 also really quick. That 1 hour. So let's look at that. Got this 1 hour. Inside this 4 hour. And you also have this Cibi. So you look at this Cibi. The midpoint looks to be somewhere right here. So it's right inside of the imbalance. 23.9. 85.25. This will be 1 hour. Now we wait. First part. You have that one, this 5-minute BC right here. I want to see that hold up price continue to the upside. And if it flips and starts to head back to the downside, you really want to see you get to this imbalance first. And take it out these highs, then you want to see something happen. But if we start consolidating here, you can see push off consolidation, head to the upside, to this imbalance, and then from there, a new situation or a continuation of whatever it was doing down here can happen, either up or down. But just wait until it gets to that point. Hopefully it gets there before end the string. Go ahead, go to the top. So that's consolidation right here. Slow price action. Come on. Too slow. And on Friday, telling you, I'm ready to get Fridays over with. Go ahead. Open to that candle. With imbalance, I mean. Oh yeah, two next week we'll be doing 1 minute price action. I want to kind of balance, giving you guys both, because I don't want to entice you guys to take anything. And what I mean by that is I don't want you thinking that you got to go to 1 minute to take a trade. You don't. Just like how you seen this week, we've been 5 minute, 3 minute, perfectly fine. So for those who think you need to go down to a lower time frame to get a better trade, you don't. You really don't. It's all about risk management. At the end of the day, it is a trade giving you a good risk. But yeah, next week I'm gonna do 1 minute, just like the same thing how we do like now. But instead of the 3 minute, 5 minute, I'll have a 1 minute here, a 5 minute to the right where the 15 minute is, and I'll have a 15 minute at the bottom. And then that 15 minute at the bottom will fluctuate between 15 1 hour 4. Well, I'll be doing navigation on the 1 minute. Just to show you guys how precise you can be if you just keep it simple. Little expansion up there. Now either we need something to happen or we start need some more consolidation. And then from that consolidation, get expansion. midpoint. See if we get a strong reaction off the midpoint, or is it gonna be mid? Because you're looking at how it bounces off of that midpoint. Come on. Look at gold. Niggas moving so slow. Ew. That is disgusting. Oh, parts it out. Come on, give it something else. This is like when it's at that midpoint like that, it's a good sign until it's not. Which means like just because it tapped it, I'm not immediately thinking that price wants to go down. I'm just solely waiting for the candle reaction off of it, good or bad. So right now it's not really going off of it, just like bouncing around it, still at it. Like I want to see some type of expansion either away from it or above it to let me know clearly what it wants to do. movement to the upside. Okay. Right back. Got rejection. Today look like it's gonna be a no trade type of day. Wish that trade was a little bit cleaner. Was this guy taken out? So yeah, we'll say that. The reason I'm using this candle included because this is a candle that stopped and started the initiation of the consolidation, and I had it marked up yesterday, so let's use this range. Let's see how price plays out up into here. This day is no bueno for me. Just because it's Friday. Well, mainly because it's Friday. Oh yeah, and that drop last night was right out of the consolidation. So right when I jumped on my call yesterday, we were seeing it drop right out of the consolidation. That whole drop. Let's set an alarm here. 2303 3250. 250. have no inbounds in the 5-minute side of here. We have one at the 15-minute. Yep, 15-minute. They can potentially hold price up. 3-minute. Oh yeah, 3-minute. Holding off at one. Three-minute. Close at 3 minute. They close it by here. Let me show you. Let's see. Let's see. Let's see. And also too, look at where this price is at. We're just at 23,000. So just to give perspective that we talked about yesterday, go turn on price. 23,000 right there. Then you have, see what we bounced off of? 875. So we set all day today. That quarter level. A quarter level inside of a quarter level. Because a quarter level will be 250. And then you got those quarter points inside of there. Let's see. I just want to avoid 23,000. Got 10 minutes left. Just 1 hour candle closes. You running. Remember, you have this 15-minute inbound right here. See a price trying to break that. Then this can be like a secondary confirmation, but yeah. What is that? It's a lot of range. Yeah. Yeah. this one today at 10 at our time, so got 5 minutes left. It's Friday, and not trying to push anything. If it comes back up to that, I'll look into that. But for the most part, also seeing how this candle closes, creating this right here, this can be a secondary confirmation, but that's 25 points. Closing the gap on it. $18 now. Yep. So this can be secondary. About to close. Give it 30 seconds. Yes, sir. This initial risk for this one is 18. We got this low right here, which is 25. got this imbalance here. Well, this low inside this imbalance, which is 39. So 1 and 2 would be from here to there with the initial risk. Yeah. So that's what we're looking at. That's what got marked up. Today, which pretty much we had that big push up. We had that big spike down last night. Looking for the vibe initially in the morning to give that. Kind of did with the push up, but for the most part with the opening, it was kind of funky. So it's Friday. You guys enjoy the rest of your week or weekend, and I'll see you guys back Monday.